So I think these 10 things are more important than interest rate drops. So this is great for the investors that have got everything right, but they're stuck because their serviceability is not right. Now, people that hold their property for 10 years, guess how many of those lose money?
Close to
5
0%.
to 10%, 5 to 10%,
Okay.
right? Because look, if you bought an apartment in Melbourne CBD 10 years ago, it's worth less now than what it was then. This is really happening. We've got to go in there, right? But by
Yeah.
the time those people do it, it's going to be too late.
By the time they realize what's happening, yeah, they
That's
would have
right.
missed out already.
So what I'm saying is now is the perfect time to really get your ducks in a row and get involved. But if you get a brand new car, but the right one that's good value for money, one that's good value for money, and one that's going to give you good fuel efficiency because it's got a good return, and you get good depreciation, you get tax deductions, you've got all that, then having cheaper fuel is great, but it's not the be all and end all. The most important thing is actually getting a property with growth potential, and at a low interest rate, not going to help you much if you buy an area with little or no capital growth. So the dip's a little book that teaches you when to quit and when to stick, because a lot of people don't know when to quit. A lot of people don't know when to stick. And it's all a matter of getting the fundamentals right so you know when to stick and when to quit. He's a very wise man, and he once said to me, everything is a trade-off.
Hmm.
And I agree. I agree with it because everything is a trade-off. And the fact of it is, when interest rates drop, it's a trade-off. Is it good? Is it bad? It's both. I
Okay.
like to share that. So that's what I'll talk about with interest rates. It's a great time to celebrate, but the thing is, low interest rates means that property is going to start going up pretty soon. And for the people out there that are watching, get your ducks in a row. The thing is, the key takeaway is rate cuts fuel property and investment growth, right? But it's not all sunshine and rainbows. But the biggest winners. Okay, guys, me and my team are about to go live, so make sure you grab your beverage of choice, sit down, and you're in for an amazing show. Okay, hello and welcome.
Hello.
And welcome. We're going live, and what I'd like to say is the RBA has finally dropped rates. We've been waiting this for a while.
Been
It's
waiting
finally
for
done.
4 years. What do you mean a
Yes,
while? Four
yes.
years.
Actually, just over nearly 5 years.
It's a
Happened nearly
long
five
time.
years. So
Yeah.
we've spent 5 years. Now, I did say I was going to have a bottle of champagne. I haven't got it with me. I forgot. I'm going to bring it next Thursday
This
night.
Friday, maybe.
On Friday, I'll pop it and I'll do a quick video
Friday
because
night.
I think we need to celebrate. It's exciting because I'm wrapped. So there's going to be winners and losers. So that's what I want to talk about today. Because what I want to talk about, we've had a drop in interest rates. I want to talk about what it means for you and who's going to win, who's going to lose. Because we got David actually who works with us and comes around and he does all our deliveries and other bits and pieces for us. And he's a very wise man. And he once said to me, everything is a trade-off.
Hmm.
And I agree. I agree with it because everything is a trade-off. And the fact of it is, when interest rates drop, it's a trade-off. Is it good? Is it bad? It's both, right? So now also, today I was getting my beard done at a new barber in West Lakes. His name's Chris. So if you're on the Facebook, say hello because he said he wanted to see me because the other guy doing my beard, he's like, you look kind of famous. I go, maybe you see me on TV on Channel 10, on Saturdays. He goes, nah, man, you look like an influencer or something. The other guy goes, what do you do? And I started talking. We had a bit of a laugh. So it was pretty funny. So winners and losers. Okay, so who's going to win? The winners, homeowners with mortgages. They're going to win because they got lower repayments, right? Now, first home buyers are going to have a chance to buy a property finally because it's going to be a little bit easier for borrowing capacity. Businesses with loans are going to be good. You know who else is going to win? The stock market. Because normally interest rates go down, people invest more in the stock market because people get
Okay.
excited.
Interesting
Stock
that it's
market
got
goes
that
up.
effect on the stock
Yes.
market.
The thing is, the key takeaway is rate cuts fuel property and investment growth, right? But it's not all sunshine and rainbows. But the biggest winners are property investors, cheaper money and easier to expand your portfolio.
Yay.
All good for us. Now, this is surprising losers. Savers and retirees, they lose because most retirees and savers got their money in the bank. They're going to earn even less interest now.
Oh, that makes sense. Yeah.
I mean, they weren't earning much anyway, but they're going to earn less.
How much was the rate cut by, George?
0.25 basis
Yes,
point.
that was by the RBA. So has it been passed on to the banks yet?
The banks have been passing it on. A few banks passed it on before it even happened.
Yes.
Because they couldn't wait. There's a bit of competition with our banks. Now, we got four of the richest banks, especially Commonwealth Bank of Australia. They are very big in the stock market. They're huge and they do very well. So they're all competing now to get as much of the market as possible. So what's been happening is the banks have been buying up a lot of other places that do loans. And they shouldn't be really allowed to do this, but they're buying up everything. So there's less competition.
They've been buying up their competition. Exactly.
They have. A bit like
Like the big
Westpac.
fish swallowing the little fish.
Well, a bit like Westpac. Remember there used to be Rams home loans, right?
Yes.
And they were excellent product. A lot of our clients use Rams.
And they were very competitive too.
They did very well. And then Westpac bought them, rammed to the ground, destroyed them because they didn't want the business, even though it was a great business making lots of money. They wanted less competitors and they just wanted the database.
Wow.
If you ask me, that just doesn't make sense, but that's what they did, right?
So they're creating less competition then?
Yes, and they're buying them up. That's what's happening. Now, normally, the government's supposed to stop that from happening, but they don't. Now, I've got a door open on the balcony here and it keeps banging. So I'll let you go and I'm going to just close this door. So I don't want to listen to this all night.
Okay. That's a really good idea.
Now, rate drops. What does it mean for us? So what this means, and I look at property and rates and property investing as cycles. You know, you could imagine cycles. Let's talk about seasons, much easier. So you got spring, you've got autumn, winter, and summer. I should have said it in order, it's better. So you got spring, summer, autumn, winter, right? And so if you look at it that way, there's always going to be a spring before summer and always an autumn after summer. That's just the way it works with the seasons. And when it's winter, we're never surprised that there's a summer after winter, are we? And when there's summer, we're never surprised.
Part of the natural cycle.
Yeah. And we're never surprised after summer that there's a winter. But people seem to get surprised when interest rates are low. They think they're never going to go up again. And when they are high, they think they're never going to go down again, right? But the fact of it is, it's always going to happen. It's not surprising at all. And I'm not surprised that now after 5 years, we're finally entered a downward cycle. So what does this mean? This is very exciting because what's happening now is inflation has sort of slowed down. So now the RBA have dropped interest rates and they're going to continue doing so. And there's probably going to be 3 or 4 other drops over this year.
When do you expect the next rate cut?
Look, it's hard to tell, but we expect, remember I said I expect something to happen this year, and it happened early this year, like I said.
Yes.
I expect another 3 this year, but I don't know when, but it will be this year.
Okay.
So what does that mean? It means that the first rate cut, people are going, finally, there's going to be a lot of people refinancing. And
it's like it's raining in a drought.
Yes. And people are going to finally start thinking about investing in property or buying a property. But they're not going to be so motivated, but they're not going to hold back anymore because a lot of people saying, I'm holding until interest rates drop. So there's going to be a portion of the market that are going to start now getting involved. But next 2 or 3 rate drops, then everyone's going to jump on and go, my God, this is really happening. We've got to go in there, right? But by the time those people do it, it's going to be too late.
By the time they realize what's happening,
That's
they
right.
would have missed out already.
So what I'm saying is now is the perfect time to really get your ducks in a row and get involved. Now, what I want to talk about is, are interest rates everything or are they just one part? And I've got an analogy to make, right? Because I was thinking of an analogy today and I was thinking maybe hamburger, maybe this, but then I thought, no, car. So if you think of investment property as a car,
Mm-hmm.
you think of interest rates as the price of petrol, right? So is it better to have cheaper petrol? Sure. But if you get a clapped out bomb, doesn't matter how cheap the petrol is, it's still going to cost you a lot of money. It's going to break down. It's going to be no good. So if you get an old crappy house that's falling apart, it's still like a clapped out bomb. Low interest rates aren't going to help you. Also,
Mm-hmm.
you can't depreciate an old clapped out bomb. But if you get a brand new car, but the right one that's good value for money, one that's good value for money, and one that's going to give you good fuel efficiency because it's got a good return, and you get good depreciation, you get tax deductions, you've got all that, then having cheaper fuel is great, but it's not the be all and end all. The most important thing is actually getting a property with growth potential, and at a low interest rate, not going to help you much if you buy an area with little or no capital growth. So picking the right location is more important, getting the top 100. Getting the right return and cash flow. If you get something totally negative geared, costing you minus 500 to 1,000 a week, low interest rates aren't going to help you. Getting the right structure and strategy is important. If you don't get that right, it doesn't matter about interest rates. If you don't know how to get depreciation and how to get money back on a weekly basis, it's not going to really affect you that much. Your market timing versus time in the market, very important, but also your risk management, asset protection. And if you don't know how to leverage and use your equity, not going to help much. And knowing supply and demand and having the right mindset. So I think these 10 things, growth potential, cash flow, property selection, structure and strategy, tax benefits, market timing versus time in the market, risk management, leverage and equity, supply and demand trends, and mindset and education are more important than interest rate drops. However, a caveat here. If you've got all the basics right, then interest rate drops are great. And why they're great? One, it's going to be cheaper to control your portfolio, right? So your weekly cash flow is going to go up. Your cash flow is going to go up straight away, which is great because most places are setting it back through. Also, your borrowing capacity is going to go up.
Numbers are going to look a lot
You
healthier.
might be able to get another property if you were stuck before. So this is great for the investors that have got everything right, but they're stuck because their serviceability is not right. Because what most happens to most investors is they start investing, and when you first start investing, it's going really well. You get one, you get two, you get three. You can get two or three, you can get 1 to 4 properties within 2 years very easily. But once you get those properties, then you get hit with the serviceability. And that's when you get stuck. And what happens is this is when a lot of people give up.
Because they hit that roadblock and they don't know
Yes,
any way
yes.
around it.
Yes. And that's why I want to share with you a great book by Seth Godin called The Dip. All right. What I'll do is I'll share the picture because the picture says 1,000 words.
The Great Dip.
No, The Dip.
The Dip.
Yep.
We're seeing a Zoom and now we're seeing a calendar.
No, can someone share the PowerPoint for me, please? There you go. Why have I got a team there? Right. Someone can share the PowerPoint and show me a picture of the dip because I want to explain the dip.
How
And then
many
we'll go back.
screens do you have, George? I thought I had a lot of screens.
Christina, I've got so many tabs open, and every now and again, one tab's playing music, and I don't know which one. So I don't know what's going on.
That's the worst.
Yeah. So, okay, the dip. This is it. So look at this dip.
Okay, the dip.
If you look at this picture, right, you start off, right, and things are going very well, and then pretty soon it goes down to a dip, and you're stuck at that dip, right? And what happens is people go along this dip, and then they quit just before things start going well and going up. That's what happens. So that's why. So the dip's a little book that teaches you when to quit and when to stick. And I'll talk a little bit about that. We can stop sharing the screen now because me and Christine will go back. So what I want to talk about is the dip, when to stick and when to quit. Because a lot of people don't know when to quit. A lot of people don't know when to stick. And it's all a matter of getting the fundamentals right so you know when to stick and when to quit.
Mhm.
And if you get all the fundamentals right, so for example, if you're buying the top 100 with our group, the property is going to double every 7 or 10 years. How do I know that? Because 3,500 people have gone through this program and all of them made money out of property. That's how I know that. It's going to happen. And what the key is, you've got to stick through it. And what happens every now and again, because the market, even though properties double every 7 or 10 years, they're not always going up. And you can pick the best property in the world, and every now and again, it's going to have, out of that 10 years, it's going to have 1 or 2 years where it flattens out and dips. And but it's only for a small period. And then some people, they get to that dip and they're like, oh my God, this is not going to work. I'm screwed. I stuffed it up. My life is finished. I need to get out. And they
A lot
get
of
out.
people have that knee-jerk reaction and then they go, oh, I have to sell all my properties because the
Yeah,
market's doing nothing.
yeah. Or my property went down and I have to sell it. The thing is,
Mm.
property is not a short-term thing, right? And 80% of people that buy property and have it for less than 3 years lose money.
Wow, that's
80%.
huge.
Yes. Now, people that hold their property for 10 years, guess how many of those lose money?
Close to
5
0%.
to 10%. 5 to 10%.
Okay.
Right? Because look, if you bought an apartment in Melbourne CBD 10 years ago, it's worth less now than what it was then.
Right.
So there's plenty of properties that have done nothing in this 10 years because it was the wrong property. So if you just pick a property out of the blue and just guess and you don't know what you're doing, maybe you shouldn't stick it. But if you got the right strategy and you get the right property, you need to stick through it and go through the dip. Because I'm telling you, doesn't matter who you are, you're going to go through a dip.
Yeah.
It's going to happen. It's like the seasons. We're going to have winter. Winter's going to come one day. Luckily, at the moment, we're in summer and life is good. And because of look, we've been in a perpetual summer for a long time, right? That's the fact of it. I've never seen property do so well than it has over the last 10 years. Because the last 10 years, in the top 100, there hasn't even been a dip. There's been no dip at all. Zero for 10 years straight. And that's unusual. I've never seen it like that. Because normally there's a couple of years of dip. Before that 10 years, used to happen, you'd get a little dip and everything else, but I haven't seen it. And because of the supply and demand ratio, and because there's such a shortage of properties, I can't see it happening for a while, which is great. So, and you know what you do when it's summer? You you
Make
harvest,
hay while the sun
you
shines.
make hay while the sun shines, you harvest, you invest as much as you can, right? Before winter. Get in there before winter. And
Absolutely.
what I'm going to do is once we finish the live, I'm going to go through some behind the scenes stuff, as I said, and I'm going to talk about properties and how I think about properties. And I'm going to talk about some live examples of some properties that recently happened where I was almost pulling people out of these properties and things like that. So it's going to be very interesting. I
Okay.
like to share that. So that's what I'll talk about with interest rates. It's a great time to celebrate, but the thing is, low interest rates means that property is going to start going up pretty soon. And for the people out there that are watching, get your ducks in a row. If you need help getting your ducks in a row, whether you listen to our podcast or your Facebook Live or YouTube, type in hashtag ducks and my team will reach out to you. Okay? And we're going to help you get your ducks in a row.